Hello, and welcome to another episode of the Market Snapshot series. My name is Rufas Kamau, Markets Analyst at FX Pesa. So once you join in, kindly say hi on the live comment section, and these will confirm that everything is working just fine. Welcome to another episode of the Market Snapshot series. So sorry for that. Let's get things started. So yesterday, the market was quite silent. We know that the Americans and the Canadians were celebrating Labor Day. And as a result of that, we had quite weak market momentum. We didn't have much volatility. But in the wake of this morning, we have had quite a number of data points that has led to quite strong volatility, which, as we all know, comes in with some good trading opportunities. So let's see what happened this morning. So very early in the morning, we had the BRC retail sales monitor coming in really strong for the UK at 4.3%. Then we had the Japanese household spending data year over year, which came in negative 5.0%. ANZ commodity prices month over month at negative 2.9%. Australian current account, which is basically the difference between exports and imports, came in at 7.7 billion. And the most surprising data point was the Kaizen Services PMI for China, which was weaker than expected at 51.8. So we had the Japanese 10-year bond auction, and then most important news this morning was the Australian interest rate data. So the Reserve Bank of Australia chose to hold rates steady at 4.10%. And this basically implies that there's a good chance that we might continue seeing other central banks continuing to hold interest rates level. And as a result of the central bank basically choosing to hold interest rates steady, then we are seeing a much weaker currency. So from the reaction we saw in the market for the Reserve Bank of Australia choosing to hold interest rates level of 4.1%, they also did the same in the last meeting. We saw a big sell-off in the Australian dollar against the US dollar. So you can see that from morning, all we have been seeing here is red candlesticks, indicating a much weaker Australian dollar compared to the US dollar. So there is a good chance that this trend will continue. So the most immediate support level is a low that we saw 3 weeks ago, and this is around 0.63629. So we are just a couple of points away from that. So there's a good chance the market will eventually get to this point. So overall, if the bearish momentum continues, then we should be looking at completely new lows we have not seen in quite a period of time. So the last time we saw the market trading this low was just around November last year. So there is a good chance we could be seeing the Australian dollar continue to weaken further back downwards. But then on September 20th, when the Fed meets, there's a good chance that the Fed will also hold interest rates level. And if they do that, then we could be seeing some of these currencies starting to make a recovery against the US dollar. So in this case, the most immediate support level is here. And if we happen to break that level, then we'll be looking at these other lows that are slightly lower than the previous ones. So 0.62731 if we manage to break this area here, but the immediate target seems to be just around the corner, which is 0.63629. So as the market gets here, we basically observe, see whether there will be a reversal or a clean break out of that level and further back downwards. So that's the Australian dollar. If you look at the price of gold, it was unable to form a higher high after getting to the 1948 price level. We have a clean break of this particular trend line. The market was unable to bounce from here and continue moving higher. So as a result, what we are looking at right now is basically the market breaking towards the lower side, and this could lead to some momentum downwards. So the immediate target seems to be a previous high. This is 1924 price level. So there is a good chance that gold could continue dropping further back downwards to around the 1924 price level. So it's also important to notice that yesterday was largely a sideways momentum for the dollar index. But then today, we woke up with a very strong dollar. You can see the strong acceleration of the dollar higher. So as a result of this, we have seen quite a number of pairs break some trend lines. An example, if you look at the USD CNH, that is the Chinese yuan, you'll notice that this particular trend line was broken and the dollar continues to gain against the Chinese yuan. So there is a good chance we could be seeing some higher upside momentum, but for now, the market is testing quite a key level that was acting as resistance for a period of time. So we observe the price action, and if we break above 7.30, then there's a good chance the market could accelerate higher and get to 7.34567, which is the previous level that we found as resistance. So these things are not looking all rosy for China. What we are basically seeing is a slowing down manufacturing sector. And as per the data this morning, we also saw the services sector also weakening and threatening to get into production territory. So with this in mind, there's a good chance we could be seeing some further weakness happening. And if that happens, then the USD CNH should be rallying higher. So let's look at the economic calendar and see what we're expecting for the day. So today is a common theme where we are looking at services PMI right after Labor Day. So we have Spanish services PMI, which came in at 49.3, way below 50.0. So it basically jumped from expansion to contraction territory. So it's basically showing pessimism in the European state. Then for Italy, it's the same thing, right from 51.5 down to 49.8, contraction again. Then for France, from 46.7 to 46.0, another contraction. Then for Germany, we were waiting for this at 10:55 a.m. It should be out. So let me try and reload. Yes. Now we have the data for Germany, which came in at 47.3 as expected, same as the previous reading, but still within contraction territory. And then for the overall Eurozone, it came in at 47.9, which is lower than the previous reading, and of course, lower than the expectation, which basically implies that the services sector is contracting within the Eurozone. So this is not very bullish for the euro, but then it's also consistent with what the ECB has been looking to achieve. So the European Central Bank has been looking to slow down the economy via rate hikes. So it seems to be working. And as a result of this, we could be seeing the ECB decide to hold interest rates level. And this is basically bearish for the euro. So if you look at the performance of the euro today, here is Euro USD, you'll notice the weakness that we are currently experiencing. So when you couple these with a very strong dollar, then the overall results we are seeing here is a big sell-off and a big breakout from this particular trend line. So we've had this trend line for quite a period of time, started all the way back. This was in March this year. We saw the market retesting the area again here in May. And now we can see that this is a clean break. The market has broken outside of this trend line and it's now accelerating down lower. So there is a good likelihood that we could be seeing the Euro USD trading lower for the day. So with the data we have seen, and now the technical analysis are showing some further downside momentum, you can see that the last time the market was trading at this level was all the way back to June this year. So if we happen to be testing the lows that we saw here in June, then this is quite a distance. This is around 1.06351. So there is a high likelihood that the price could continue pushing down lower until it gets to that level, which is around 1.06351. So we have seen a breakout happening in gold. USD CAD is breaking up to the upper side. So after forming the double top formation, pulling back downwards, we found some good support. Market rallied, and today it has broken that previous high. So there's a good chance we'll be seeing some further acceleration. So for the US equity indices, they're basically forming a reversal pattern. So the reversal pattern is as follows. The market was making a strong upward momentum move. And now from the price action we saw yesterday, the market was unable to form higher highs and it's now attempting to break towards the lower side. So from me, what I'm seeing is this can be considered a shoulder, a head and another shoulder, which would basically call it a head and shoulder formation, which is basically a reversal formation indicating weakness in the prevailing trend. So that's for the Nasdaq 100. For the US 30, or basically the Dow Jones Industrial Average, what we are seeing is a rising wedge, or more of a, I'll call it a descending triangle. So if you just focus on this high, and then on this low, and then you look at this, it's a market that basically consolidating, and it's about to break out. If the breakout happens to the lower side, the better, because it would represent a reversal. So as for the S&P 500, it's the same thing. The market is retesting that support. And if we happen to see that break, then it would basically imply that the market was unable to form higher highs and is now seeking to form lower highs. So as a result, if you consider the price action on Friday as the head, yesterday's high as the other shoulder, and then Thursday last week as the other shoulder, then it's clean that this is a head and shoulder formation, and the market is now breaking towards the lower side. So you've just broken the neckline. So there's a good chance the market will accelerate back downwards. And the immediate target now remains 44.72, which was our previous high at this point. So as for Brent, we managed to close the gap, the weekend gap here. There was a weekend gap. The market had opened further downwards. So it rallied, closed the gap yesterday, and now you can see prices accelerating back downwards. So a welcome pullback, especially after we saw the strong rally happening over the last 2 weeks. So as the market pulls back downwards, notice that there is an immediate area that was acting as a resistance. So this might be acting as support. So the market could be moving back to retest this area. And there's a good chance this is a support level we should be watching. It's 7.68. So as for now, it's clean. It's clear that the price is moving back downwards. The target is not very far off. It's around 87.68. And now from here, we observe to see if there's a further acceleration downwards, which could lead to $85.48 per barrel. But then if we find support here, then we move back to retest the previous high. So as for European equity indices, we have the French 40 index making a big sell-off, especially after the services data showing some weakness. It's the same thing for the Eurozone, big sell-off. And of course, if you look at the UK 100 index or the FTSE 100, also another big sell-off. So my bets would be on the French 40 and the Euro stocks. So I expect this to continue selling for the rest of the day. So there is a good chance we could be seeing the market accelerating further downwards. And of course, if you have been monitoring this, then you know the breakout happened early this morning. So you can see that this area was acting as support, market breaks out and keeps going. So there is a good chance that we continue seeing the sell-off as a common theme for the day. So Euro stocks, the same thing. So the support is all the way down at 4,215. So there is a good chance we could be seeing the price getting to that level. So that's it for the day. Let me check if you guys have any questions. Try to respond as we approach the end of the presentation. Hi, Kazadi. I can see young CEOs Kenya. Hi, Philip, Abel, Lemuel, and Richie. Recently, I've been hearing about Frankfurt session. How different is it from London, 10 a.m. to 4 p.m. session, or say European session? So Frankfurt tends to share the time zone with the UK, so it's not much of a difference. So the only difference, I would say, notable difference is that stock market, a majority of the volume, if it's not being traded in Britain or in London, which is basically the European financial capital, then that particular volume is happening in Frankfurt, where we have the Euro Stocks index. So, well, this is second. It's important to track the volumes basically running in Frankfurt, and then compare that with what's happening in London, though in most cases, there will be some form of positive correlation. Another comment from Apollo here. RSA expressed its concern about persistent global services inflation and lags in monetary policy. However, high rates have spooked the markets, e.g. mortgage, and these have costed the RSA governor term renewal. Yeah, that's true. Assuming you are referring to the Reserve Bank of Australia, which is the RBA rather than the RSA. So yeah, it's true. The high interest rate environment have cost a lot, especially in the real estate sector, as well as commercial banks holding bonds. But then continuing to hike interest rates, knowing very well that they have a lagging effect, could lead to the economies involved getting into a recession. So the RBA is taking an early guide on this one, while the US has majorly accelerated rates in a level not seen before. So there is a good chance that the Fed may also hold interest rates level on the next meeting. Remember, the meeting is happening on 20th of this month. So from the CME Fed Funds futures, we are seeing the market pricing in a 93.0% chance that the Fed hold interest rates level, and only a 7% chance that the Fed goes for another rate hike. So it's becoming a common theme across board as other central banks continue to monitor their economies closely, and the high interest rates are hurting the economies. So as a result of that, we are seeing a common theme where central banks are consistently choosing to hold interest rates rather than going for another rate hike. So in this case, if the Fed might hold interest rates steady at the current level, then there's also this good chance that the Bank of Canada may also hold interest rates steady at 5%, and that's during the next meeting tomorrow at 5 p.m. All right. Thank you very much, everyone. Thank you very much, guys, for your time, and I hope to see you on the next one. With this, don't you see hawkish pause by central banks? Yes, I see out of central banks choosing to hold interest rates level. So in that case, it wouldn't be hawkish, rather it would be dovish news. Hi, Ivy. Welcome to the session. Hi, Dennis and Gaddafi. So as I normally say, once we do the analysis for Brent oil, there's almost 100% correlation with US oil. So that's why we chose to analyze one and leave the other. So in this case, by analyzing UK oil and the price action here, then it's a little bit similar with what we'll be expecting for US oil. So thank you guys. Bye. Make sure that you subscribe so that whenever there's a live session, you'll get notified.